If you own Bitcoin, you really need to hear this. This drop wasn't random. It wasn't a normal correction. And honestly, even I didn't realize what triggered it until I started digging into the data. And when I finally understood it, yeah, I was just as shocked as you probably are right now. All right, guys. So I spent the last few days digging through charts, reports, news, on-chain data, basically everything I could get my hands on. At first, I thought, okay, Bitcoin is dipping, nothing new. But the deeper I went, the more it became obvious. This wasn't just a dip. This was a chain reaction. And today, I'm going to break it down for you in plain English, like we're just sitting and talking. No drama, no hype, no nonsense. Let's start with the real culprit. So here's the thing nobody wants to admit. Bitcoin didn't fall because of crypto news. It fell because of macro news. The US Federal Reserve basically told the world, yeah, we're not lowering interest rates anytime soon. And when that happens, money gets expensive, liquidity dries up, investors suddenly become allergic to risk, and Bitcoin is the riskiest kid in the classroom. I swear, the moment the Fed hinted at higher for longer, Bitcoin started falling faster than I do when I try to squat too much weight. So reason number one, Bitcoin got slammed by macro conditions, not crypto drama. Let's be honest. Bitcoin had an insane run this year. It doubled. It broke an all-time high. Your cousin probably asked you if he should buy it at the top. So what do big investors do after massive gains? They cash out. No conspiracy. No secret whale meeting. Just normal, hey, let's lock in some profits. And when people who bought at $40,000, $50,000, $60,000 start taking profit at $100,000 plus, that's a lot of selling pressure. So reason number two, profit taking. Totally normal, totally expected. Ah, yes, leverage. The thing that makes bull markets magical and crashes absolutely brutal. Here's what happened. Tons of traders were using leverage price, dipped a little, liquidation levels got hit, those liquidations forced more selling, which triggered more liquidations. It's basically a giant crypto domino line. One piece falls, and everything else goes with it. So reason number three, excessive leverage turned a small dip into a full-on flush. Everyone said ETFs will make Bitcoin go up forever. Well, not exactly. ETFs also cause selling pressure. And over the last few weeks, several major ETFs saw some of their biggest outflows since launch. Institutions aren't dumb. When macro looks weak, they de-risk. So reason number four, ETFs pumped Bitcoin on the way up and helped dump it on the way down. Bitcoin broke below $100,000, and every trader on Earth knows that's a psychological level. Once the chart lost that support, stop losses triggered, algos flipped, bearish momentum died, and everyone suddenly said, yeah, maybe this isn't the bottom. Some analysts even started talking about a possible death cross, which is basically the market's way of saying, hey, things might get uglier before they get better. So reason number five, the chart broke, and the market followed. And finally, liquidity. Right now, Bitcoin's liquidity is kind of thin, like trying to pour honey through a straw thin. So when big players sell, the market moves a lot because there aren't enough buy orders to absorb it. Some of the steepest drops happen during weekends, late-night hours, low-volume periods. When liquidity is weak, even normal selling feels like a crash. So reason number six, thin liquidity made everything 3 times worse. So yeah, Bitcoin didn't fall because of one big disaster. It fell because 6 different things all hit at the same time. Bad macro, profit-taking, leveraged liquidations, ETF outflows, broken technicals, weak liquidity. Is this the end? No. We've seen this movie before. 2013, 2017, 2021, 2022. Every cycle has a moment where everyone thinks, okay, it's over. And every time, it wasn't. If you want me to make a follow-up video on whether Bitcoin will recover or drop further, let me know in the comments. I'll dive into all the scenarios. Thanks for watching, and hey, if you learned something today, drop a like. My dopamine receptors will appreciate it.